Hey everyone, JC Peretz here. Today was our monthly conference call. We've been doing this for years. Right around the middle of the month, we get together, all of our clients around the world, we log in, and everybody watches it live. A lot of other people who can't make it live can then watch the archived version. We always archive the video and the PDF. But today, I wanted to share with you guys a little snippet to give you an inside look as to the types of things that we're talking about in the conference call. The first thing that we want to talk about is the US dollar index and sort of the implications that that's having on the market. This is something we've been watching all year. Check it out. Coming into the year, like, listen, the US dollar is going to rip right through this. You know, after such a huge rally, it's probably coming in a circumstance that stocks are selling off hard, right? Money is coming out of equities, and the US dollar is really being used as a safe haven, a flight to safety, because, you know, things are really bad elsewhere, volatility is high, all of those things, right? So that's the thesis. So we flip that thesis around and be like, well, okay, what if the dollar is not doing that, and we are in a weakening dollar environment, and the dollar's selling off? Well, let's think about the exact opposite sort of scenario of stocks crashing and stocks getting crushed. Stocks should be doing very well in an environment that the dollar is falling. And not only should stocks be doing well, we look for areas like emerging markets and dollar sensitive areas to really outperform and do well in that sort of environment, right? So that's the thesis coming into the year. Obviously, the dollar did not rip right through those levels, you know, has really been struggling. And sure enough, stocks have been doing very, very well. So I think this is a big theme that not only did we have coming into the year, but we currently continue to have. So this is the trade-weighted US dollar. So this incorporates, you know, a whole slew of currencies, like 20 something of them, instead of having the euro as a major component, which is the US dollar index is basically like 60% euro. Another interesting trade is Freeport-McMoRan. I think it really represents this gold, commodities, copper sort of Latin American thesis that we've had all year. Here's what I'm watching. One of my favorite trades of the year with sort of this thesis in mind has been Freeport-McMoRan, not just on an absolute basis, but on a relative basis as well. Getting down to the 61.8% retracement of the entire 2016-2018 rally. And something to keep in mind here when it comes to Freeport, remember what Freeport really means. You know, it's a proxy for that, you know, commodities, Latin America, you know, sort of trade, right? This is copper and gold. I mean, this is a big theme. And here we are continuing to make new highs, you know, really sort of the poster child of this commodity-based theme, dollar weakness that I've really liked. You guys know our research starts from the top down, and we work our way from the global macro look down to the stock specific level. When it comes to international stock markets, the London FTSE 100 has to be in that conversation. Here's what's going on. You know, based on the weight of the evidence, you know, we're either going sideways or we're going higher. So I'm not seeing a whole lot of risk out there where stocks are just going to get absolutely destroyed. It looks sideways to higher. You know, we'll go over these charts one by one so you can see this. So, you know, you guys know how important London is to me. And, you know, we're looking at the London FTSE 100 coming out of a 20-year base. You know, to me, that's constructive for sure. I've been saying it since the beginning. If London FTSE 100 is above the 1999, 2007 highs, you know, we need to be erring on the bullish side of stocks. And we continue to hold above those levels, and I think that's constructive. Here's a little indicator we built called the Fab 5, right now making all-time highs. Here's what's going on. A great indicator, guys, that I love to look at is what I call the Dow Fab 5. You know, remember, the Dow Industrial Average is a price-weighted index. So what I like to do is I take the top 5 biggest components, which represents a third of the entire index, because remember, it's price-weighted, and I equally weight them. And here we are making new all-time highs in the Dow Fab 5. Let's remember, they look exactly the same. You know, they really do behave. Obviously, these are the top 5 components of this index, represents a third, but they really do move together. Here are the Dow Fab 5 making all-time highs already, and I think the Dow follows suit. Let's finish up with crude oil. We've hit our first upside objective, and I think the next leg higher is about to begin. Here's what's going on. I still like oil. I think oil breaks out. You know, I think we get back above 56 and we get another leg higher. So if we were above 56, guys, we want to be long crude oil. I love that bullish momentum divergence that we had at the end of last year. I think we got the first leg, we consolidated sideways, now we break out. So if we're above 56 in crude oil, we want to be long. I think we go to 63.75, just under 64. which was support last year and a key retracement as well. So 56 to 64, I think we have 8 points. And then what does that mean for stocks overall? I mean, listen, in the past, crude oil is not always correlated with the market, with stocks. You know, a lot of times it's been, it's had a negative correlation, right? So to me, we want to be noticing how the correlation is now, and it's been positive for years. So if we're right on crude oil, and we're about to get a next leg higher in crude oil, and I do think that we have another 8 points to the upside here, that's not nothing. I think the stock market does well, and it takes it to new all-time highs, and we see that simultaneously. Those were just a few little snippets on our monthly conference call. We do it every month. We've been doing it for years. We archive the video, the trade ideas, and the PDF with all of the charts. So I encourage you, go to allstarcharts.com/join, start a risk-free trial, and get access to the entire video. That's allstarcharts.com/join. Thanks.